Welcome back, everybody. We had such an interesting discussion with Jason Eisen from Utu about trust and decentralizing trust on the internet that we decided to skip our break. We ran over a little bit. So now we're heading into our next panel discussion, which is going to be really, really exciting. And it's about how you manage your enterprise, your venture, you know, how can you get funding? How do you plan your exit and potential mergers and acquisitions? And so the speakers for this panel are Gokul, the head of primary markets for the London Stock Exchange. Hello there, Gokul. We have Ameya Upadhyay, the venture partner at Flourish Ventures. Ameya, apologize. I'm sorry if I mispronounce your last name. You'll repeat that for me at some point. Make sure I can get that correctly in the future. But I'm happy to have you here. We have Samuel Salako, a partner at Olajide Oyewole LLP, which is a law firm in Nigeria and a part of DLA Piper, also in Nigeria. We have Andreata Muforo, a partner at TL.com LLP. And then we have our great moderator, Boko Inyundo, a senior marketing manager at DLA Piper. Boko, please take it away.
Thank you very much, Neander, and welcome everybody. Yes, this panel is going to be covering the next wave: funding, exits, and M&A, and looking at the Africa and tech ecosystem. Thank you, Neander, for introducing all the panelists, and welcome to my panelists. Delight to have you all with us. If I may say to the audience, we will be taking questions and answers, but if I can ask you to bear with me and have some patience, as I'll be taking your questions from the chat room towards the end of this session. But please, throughout the session, just pop in your questions. I'll have a look at them, and during the course of the conversation, I'll put them to the relevant panelist. Well, thanks, guys, for joining us, and pleased to have, at late notice, my colleague Samuel Salako in Lagos. We're both at DLA Piper, and great to have Ameya, Andreata, and Gokul with us. No doubt in lots of different places on this earth, but London, Dubai, Nairobi, and obviously Samuel in Lagos. Fantastic to have you here. Now, I think to kick off the conversation, I'd like to get a sense from where all of you sit in the ecosystem. In answering this first question, could you just give context for who you are, the company you work for, and what the main focus of what you do is? But then, in giving us that context, do let us know what you're seeing in terms of funding flows, M&A, and exits in relation to the impact of COVID. We've been living through this chaos for the last 8 or 9 months, and clearly there's been an impact, certainly off the back of the economic impact from what was initially a health hazard. So if I can ask you, Ameya, to just set context with what you do, and also to give us a sense from where you sit in the ecosystem as to what you're seeing in terms of funding.
Absolutely. Glad to be here, Boko, and hello, everyone. My name is Ameya, and I work for Flourish Ventures. I lead the Africa investments, and Flourish is an early stage VC fund with a purpose. So in terms of where we sit in the ecosystem, it's pretty early. So we do seed, Series A, Series B across the US and emerging markets. We are a $500 million fund, 60 companies in the portfolio, $300 million in assets under management. And we focus on fintech, right? Well, we define fintech pretty broadly. And this will come into the answer that I will give to your question, Boko. In terms of impact of COVID, I think we're dealing with 3 global trends, and those devolve into funding. And from where I sit, I will primarily talk about funding, and then there are others in the panel who will probably later in the funnel and see more exits and M&A come out, right? Those 3 trends are deglobalization, everything is getting more local, more digital and more remote. I don't need to talk about that. We all know what's happening. And big governments and big companies in a race of survival for the fittest, those who have more of a balance sheet are able to perform better and smaller companies are being pushed out of the market, right? So when we look at how the funding ecosystem has evolved since COVID, we've seen the impact of all of these three across the world and particularly in Africa. And let me quickly take a fintech lens to it so that I'm talking about stuff I know best. And then, of course, we will talk in more detail later on. I mean, one of the biggest things we've seen coming from the trend of more digital, more remote is a complete ballooning of digital transactions and payments, right? So I have seen in our portfolio several payment companies increasing throughput by 3 to 4x since January. I'm sure everyone saw Paystack's acquisition by Stripe. Everyone saw Visa making a significant investment in InterSwitch, and I think that trend will only accelerate. So payments are going to go up, and I think by extension, digital banking overall will go up as less and less people feel comfortable visiting branches, and cash usage decreases more exponentially than before. So that's one trend. The other trend I think that will gain momentum is that of embedded finance. And by this, I mean companies that are not explicitly fintech companies, but are including fintech in their offering as a part of the stack. And this I see accelerating in COVID because everyone has less money to spend. And so providers need to get more of the share of the wallet, right? Because the wallet is smaller. So everyone needs more share of the wallet. So this bundling that was already happening pre-COVID will accelerate after COVID. And what do I mean by this? Simplest example is WeChat, right? It's a communications chat platform, but it's also the biggest payment company in the world. And I think this kind of bundling, which is already happening in Africa, will only accelerate. And I can talk about more about this in the later on in the panel. Finally, I will say the third trend, which I see accelerating, is financial infrastructure becoming even more important. And this is a derivative of the second trend. As more companies include financial services into their offerings, we will see infrastructure providers providing the backend plumbing to make that happen. So I took a very fintech specific lens to this, but I think the general point about the three trends will apply overall. And quickly to make one point about geography, I have seen an increased focus on geographies that have more of their GDP coming from internal consumption as opposed to external trade, which is disrupted, and geographies that are less commodity focused, given the fluctuations and depression in commodity prices. So for Africa, that means an increased interest in Egypt, for example, right? Even though part of the government receipts come from Suez Canal and so on and so forth, it is more resilient and more domestically focused than several other African economies. And I see quite a lot of interest from investors in Egypt.
Thank you, Ameya. So it's sort of diversified economy, clearly helping in terms of your analysis of geographies. But also I'm hearing fintech, and I'm hearing fintech. Fantastic. Can I come to you, Andreata, to see whether you're seeing similar or different, and naturally where we all sit in the ecosystem, we're naturally going to see slightly different contours in the ecosystem. So, Andreata, what's your view on funding flows at the moment in Africa and tech?
Sure, thanks, Boko. Hi, everyone. I'm Andreata. I'm a partner at TLCom Capital. We're venture capital fund. I've been around for 2 decades, so historically looking at Europe and Israel, and over the last decade started to work on the Africa continent. We are investing out of our Africa fund, which is $71 million. And we invest early to growth stage, fairly sector agnostic. So within our portfolio, we have companies in logistics, in education, in data, enterprise software, as well as talent. And I guess to go dive straight into the question you're asking, I think also to complement the response that Ameya gave, which was more from a company perspective, I'll take the question a level up. So thinking about funds and actual investors into the company. So I think generally what we're seeing this is more specific to the Africa VC space is, investment into the continent has been growing significantly over the last, say 2 to 3 years. When you look at depending on which report you look at, last year between 500 million to 2 billion was raised for Africa-focused tech companies. So certainly this year, I think the growth is going to be much slower. As can be expected, I think on two fronts. For one, from the investor side, we've seen, investors have focused a lot on supporting their portfolio. Some have been a little bit more cautious around, making new investments, or even just being limited, right, to being able to travel, to be on the ground, and to do due diligence. So I think that's one aspect of within the funding space that will impact the size of, the capital to be raised this year. And I think on the other side also is around the companies themselves. So we've seen companies delay their raises or, raise internal rounds for a time when, their metrics and their KPIs are looking much better, because fundamentally this year is going to be either flat or just an incremental growth. And also, I guess, depending on the business, some businesses may even have experienced slower growth than before. So I think in that respect, it's going to be slightly lower. But I think in the mid to long term, I personally, and I think the market in general, and also to the point that Ameya was making, is that the pandemic in some way will have positive impact on the kind of digital space and the tech space on the continent, because of that acceleration towards digital transformation, so I do anticipate that investment is going to increase over time on the continent because of that, because we've seen an acceleration, whether it's digital payments, last mile distribution, e-commerce, an increase in trust about people transacting digitally, which I think is a big element to the growth of this space.
Thank you, Andreata. So interestingly, post-COVID, more and more people getting more comfortable with digital there, and your glass half full for the medium to long term, perhaps glass half slightly empty for the short term. Yes, Gokul. I think in Dubai currently, based in London, the London Stock Exchange. From your vantage point, what are you seeing in Africa and tech in terms of funding and M&A flows?
Well, thank you, Boko. And that's right. I am based in Dubai, and I represent and work for London Stock Exchange. I am head of Africa, Middle East, and India for them. I've been in capital markets for about 19 years now. What do I do for London Stock Exchange? I talk to companies and their shareholders, owners, about when is the right time to go public, and perhaps make a case for London as a destination to go public. Boko, you asked a question around funding in the times of COVID, as well as where do we sit in the ecosystem. And we from a fundraising, exits, and M&A, from a London Stock Exchange perspective, we participate in all three of these areas. Fundraising for sure, as a avenue of primary capital raising when a company does choose to go public. Exits, when it's a shareholder also looking to divest at IPO or subsequently. And M&A, when that company, which is a publicly listed company, goes out and acquires another company and requires financing in the public markets to do so, or M&A in that the public company itself gets acquired. What have we seen, since March in terms of IPO activity on our markets? I'll give you a sense at a global level, and I'll be concise, but give it to you at a global level, which is the months of March, April, and May on our markets were generally months of follow-on activity on the part of already listed companies raising capital for working capital, for rescue financing, for buffering up balance sheets to to withstand the stress that COVID was presenting. That was a story about March, April, and May. June onwards, actually, we've had quite a robust IPO and quite an attractive IPO market globally. And that's not just on our market, that's in European destinations, it's in the US, it's in China. On our markets, now boiling it down to a little bit in the technology space, we've had 7 technology IPOs in the last 7 weeks. I can't think in recent times we've not had such an active tech IPO market for a while. Now, who have these companies been, you'll ask? Now, they've not been African, but we'll come on to that. There have been names like the Hut Group, based in Manchester, Phonics Mobile, which is in fintech, Calnex, which is in telecom systems testing, Guild Esports, or Kaspi being Kazakhstan fintech. So we're seeing a lot of tech activity. We're seeing a lot of IPO activity. Now, from an Africa perspective, we've not seen much issuance. Last couple of years, we saw a reasonable amount. People ask us, does that mean the appetite for new listings from Africa is limited? No, we speak to investors, kind of typical institutional investors, and they'd welcome an IPO out of Africa. It's not that it's just that we've had maybe a little bit of a slowdown in your typical Africa IPO coming to market.
Great, thank you, Gokul. A nice global lens there, as well as reference to a couple of companies that have been active, but also looking into African markets and seeing a little bit more confidence, I guess, since June, whereas the months before it were a little bit more focused on ensuring that the businesses were robust enough and resilient enough to withstand COVID. Now, Samuel, your perspective from Lagos. I'm from Nairobi. I'm based in London. What are you seeing? Clearly, the landscape in Lagos right now with the protests is challenging, and also at the very start of this in December and January, really, COVID was a health hazard. What are you seeing as far as our team in Nigeria and across the African continent are concerned in terms of funding flows, and also perhaps looking beyond fintech and thinking about other subsectors within tech that may be attracting interest pre or post COVID?
Thanks, Boko. My name is Samuel. I'm a partner in Olajide Oyewole, the affiliate law firm of DLA Piper in Nigeria. I do M&A, private equity, and I also have some bias for intellectual property as part of my role. What are we seeing, or what are we seeing right now? What we've seen in the last few months since COVID is that, just to echo Andreata, there's obviously been a slowdown in investments in country for obvious reasons, because everybody is trying to reappraise the business case for all the investments, for their commitments. So, and for also practical reasons as well, because for most part of the year, the regulators across Africa, I think that's true happened to most part of the world, were shut down. They were not really functioning. So you couldn't really, get approvals for M&A or any other regulatory, interface that you may require. And what we're also seeing is that in terms of deals in Nigeria and in some part, at least in West Africa, what we're seeing is that there is an increased focus on health tech. And I think that is a natural flow from the pandemic, because, that suddenly becomes an area of focus for investors to ensure that, the effect of COVID is actually, there are services that can take care of that. And because of the move to the digital space, we also see some investment and activities in logistics as well. I mean, in a place like Lagos, for instance, one of the most fledgling business is actually logistics. Or anything that has to do with e-commerce is very lively, and I can say that too about Kenya as well. But we're seeing a trend here now that although there's been a slowdown in tech activities in Nigeria, what we're also seeing is that there's just a little bit of a crowding of the space right now because of some of the government intervention programs that we're beginning to see. So the typical funding structure for businesses, for tech businesses, are now changing slightly because the government is making a lot of palliatives available. Because of the effect of COVID, everybody recognizes that COVID is a very serious event. So the government is making a lot of palliatives, available, a lot of funding, cheaper funding available. So there is the tendency, for businesses to think that these funds are cheaper, and they would rather go for the fund, than deals. So reduced deal flow. Obviously, is very unlikely that we're going to see the kind of level of activity and money that came in last year, up to 2.2 billion, to Africa Tech, that we saw last year. We're not anywhere close to that. The other speakers have referenced the notable deals, the paystack deals, the industry deals. Those seems to be an outliers right now, and both of them are in the pipeline anyway. So it is unlikely that we're going to get back to the same level that we are, and for all those reasons that I've articulated. But at least from the funding perspective, it would be good to look closely at what each government across Africa does post-COVID in order to stimulate the economy, because that may impact on availability of projects, within the continent.
Okay, thanks, Samuel. So each of you have given us a fantastic sense of what's going on the ground, as it were, with respect to funding. If Gokul, I can come back to you as you talk to the London Stock Exchange's role in stimulating some of these innovations by helping folk aggregate some of this capital. What if I were a founder, and wish I was, given some of the money flowing around, given the Paystack deal recently, and I was looking at a listing in London versus, say, the US or elsewhere? What are the advantages of London to this ecosystem? Because some of our audience will naturally be involved in some of these projects at an early stage and be considering some of that sort of work that needs to be done in order to access that capital. So, advantages of London.
Sure, thank you, Boko. I think, and here why would an Africa tech business choose London over the US? So the US is a very large and well-renowned technology market, but it is a very domestic technology market. And when it's not domestic US, historically it's been Chinese. So if you look at all technology in the US, 95% of by value is either US companies or Chinese. In London, what you have is a much more international exchange, and it's an exchange and investors, really. It's more about the investors. It's an investor base that truly understands Africa. And by that, they don't think of it as a country or a continent. They actually understand region by region and country by country. And the story has changed over the years. A few years ago, it was an investor base that wanted a Pan-African champion. Today, the market has moved such that they actually they're happy with a Pan-African champion, but that is not a limitation. If it is a country-specific or a region-specific play, that's just fine. That's because the investor base that invests in London has historically been investing in London towards African business since 1938. Today, we have about 140 companies with an aggregate market cap of $200 billion on London. So it's an investor base that really knows Africa. And I think, also in terms of the market cap spectrum where we play, for an African business, anywhere from the $100 million market cap up into the billions, but $1 billion, $2 billion is kind of a sweet spot for Africa tech to play in London. In the US, for example, if you look at the average market caps where NYSE and NASDAQ IPOs in tech really succeed, it's several billions of dollars. Thank you.
Great, thank you, Gokul. And I hope that helps the audience, particularly anyone with those sorts of that armory of capital. Now, I think let's before we look at perhaps some of the barriers, can I come to Andreata and ask her for her view of the different participants currently in a post-COVID African world? Who's taking an active interest in Africa and tech right now, perhaps even beyond the tech VC environment like TLCom Capital? Who's interested? Who's playing right now? And particularly post-COVID, who's expressing interest in some of these opportunities?
Sure. Let me take that question, starting with who's playing now, and then kind of my thoughts around what this will look like post. I don't know if there's a post-COVID, but when COVID is under control, let me say that. So I think you have your seed funds that are mainly anchored by high net worth individuals that are playing in this space, and then you have VC funds like ours, like Flourish. Who also have, so they do have we have institutional investors, and as well as DFIs, so your development finance institutions are actually actively investing in some of these funds. There are very few. I could count them on one of my hand, I think. And then also, so those are like the two categories in the, as you could say, the kind of pure VC space. And then these, and also in this category, these are funds that have been raised, solely and dedicated to the Africa investing tech VC. Then you also have DFIs who are being direct investors into tech businesses, and I think the most active that I've seen on the continent is the IFC, who actually have a venture arm that's dedicated to making investments. But there are a few other DFIs as well that are acting and active. Then you have US, UK, Chinese VC investors that come. I want to categorize them more as one-off opportunities, in the sense that when they see something that's interesting to them, that's aligned with say spaces that they know, then they make an investment. But it's not that they have a team sitting in Nairobi, sitting in Lagos, making investments in the VC space, but they are active, and we've seen a couple make investments on the continent. And then I would say the final category is really your strategics, your corporates. So as you can, and these are also they also come into play on the M&A, kind of with an M&A strategy. So if you think about Visa, I guess, and then Stripe in the sense of when you think about Paystack. And some Chinese also and Japanese companies. Toyota, for example, has made several investments in logistics and transportation startups on the continent. So you have a variety of active players within this space. My view is, and what I've seen is that, so your seed funds, your VC investors, as well as your DFIs will continue to be active. We've continued to be active where, we've been making investments even, in the COVID times, and because we see the long-term value and the kind of the upside of VC on the continent, and they've already taken a view around that. So I think that group of investors will continue to be fairly active. I think the one-off investors, I think, as well as I think those, you'll see a slightly slowdown around that as they retreat towards their core, towards what they really understand. I mean, if opportunities come, people, they will invest. But I think fundamentally, the people who really uphold this space are the ones with capital really dedicated to the space. And I think also, I know that the entrepreneurs listening to this, then you're like, so what? Like, what does this mean for me? And I think for the point here is that, yes, there are different players in the space, but I believe that if you have an attractive business, it will get funding. And the funding can come from any angle, from different types of investors. So I think as an entrepreneur, capital is there. yes, we've gone through this bump, which, it's a global issue. It's not an African issue. Many times we're having to deal with Africa issues and not just global issues. But I think there's significant interest in investing in Africa tech space. So as an entrepreneur, just really focus on building that business, and you'll be able to find investors.
Great, thank you, Andreata. So there's still much to play for post-COVID. We've got a few questions coming in relation to statistics around how much African-based VCs have been raising in the past few years. I don't know, Ameya, and possibly after Ameya, Andreata, any interesting statistics and/or a sense of what sort of numbers we're talking about?
Yeah, look, you're not going to find how much LPs are putting in funds anywhere publicly. A proxy, although imperfect, is how much is actually going into companies. And I think Partech publishes that every year. And it's been doubling every year in the last year, 500 million, 1 billion, and 2 billion. I will say there's another interesting statistic from FT Partners, which says globally, the dry powder available to VC and PE funds right now is 1.5 trillion, which is the highest that it's ever been. And this goes back, I would like to endorse a point Andreata was making, that people have money, they have raised money, and it's going to go somewhere. I think investors will get more discerning on which specific sectors they invest in and which regions in Africa they spend in. Because I think one thing COVID has done is increase the divergence between the future potential for success of different segments and different countries, right? So segments that focus on is delivery of essential goods and services. So agri-tech, for example, logistics, as Samuel was saying, B2B commerce, and core infrastructure plays and core essential services technologies will receive more investments. And we've seen that. We've already seen those rounds come together. Similarly, I think countries that present a more stable macroeconomic picture will diverge wildly from countries that are unable to handle that risk. And as I was saying, I've already started seeing investments being diverted into some of those countries. I will make one more point, which is that I think when we're talking about exits, we need to distinguish between an IPO or a strategic acquisition versus consolidation. Because while I agree with Gokul and with other views that this year specifically, we're not likely to see many major exits. And as Samuel pointed out, most likely the SpaceTag acquisition was already in the works. I mean, it's for sure it was in the works, and Emphasis was before this. I do think that we are likely to see consolidation in certain mature sectors, payments, for example, credit, for example, which are likely to stress smaller companies much more than bigger companies. So I do think we will see some acquisitions, although they will be in the bucket of consolidation and maybe distress sales, as opposed to VCs jumping with massive IRRs.
Thanks, Ameya. And apology, Andreata, if you've got any stats, perhaps you can share them in a while, but I'm conscious of time. And I do want to feed into this conversation a sense of the challenges and the barriers to investing in Africa in tech, because a number of you have talked to some of the risks, and a number of people in the audience will naturally be aware of some of the risks of operating within the continent. But post-COVID, what are you sensing as we look perhaps at the months ahead, or the impacts of COVID, looking at the months behind us? What are you seeing as perhaps some of the challenges? And I'd like particularly Samuel to get an opportunity to talk to some of the regulatory issues that might come front and center to any of this. But who first? Who's willing to take? Gokul, can you give us a sense of what the barriers and/or challenges to investing in African tech may be?
Yeah, sure, Boko. You know, I think you know, I'll rephrase the question slightly to allow me to answer from where I sit, rather than. But I think I won't change it dramatically. Rather than challenges, for money to come in. Maybe I'll say I'll rephrase it as what could happen, or what would be the events that would shut an IPO market off from Africa? Let's put it that way, right? What could happen, and what kind of major fault lines can happen that would shut it off? I think, unfortunately, sometimes episodic and very company specific, but episodic fraud and corporate fraud is something that worries investors, especially international investors, that sometimes broad brush a market. So I think fraud and corporate fraud is dangerous for a market. I think political uncertainty, election uncertainty, and those kind of dynamics in a country are not conducive to a successful IPO. And then lastly, I think, Boko, what you were referring to, perhaps Samuel stepping in, is the ability of a government or a nation to change regulation or change law such that the company's equity story or equity fundamentals then change, can switch off a market or turn off a capital market.
I can also just chime in. If I could just chime in here, I think one of the, kind of linked to what Gokul was saying, is I think one of the main challenges or barriers which can be outside, I think many things can be within the control of the startup, but I think one that usually looms over African countries or economies is really the macroeconomic challenges. So, devaluation of currencies, COVID has had an economic impact on different economies. So, it's a challenge. So startups need to grow much faster than they had anticipated before, as if currencies are depreciating and being devalued. I think for me, that's one of the ones that's a bigger challenge, because it's a little it is outside of an entrepreneur.
No, thank you. And quickly,
if I may,
Samuel.
Okay, so if I may quickly, so we need to look at the fact that there's going to be a lot of competition to attract capital. So you're going to see countries outbidding themselves to sort of make liberal laws, offering a lot of fiscal incentives. So what you're going to have is that the regulatory environment may change to be more accommodating, for deals to be done quicker, and for deals to be done, a lot easier. And then what you're also going to see going forward is that there will be different approach to, M&A transactions, especially certain clauses that you will be seeing in those agreements. That also you may see there may be opportunities for insurance as well, for special risk insurance, because this the COVID has shown us that there is there are things that we need to protect against. But one of the unifying factors I see across Africa is that there is actually a lot of focus and emphasis on cybersecurity, and personal data protection. And one of the drivers for this is obviously e-commerce and a lot of digitalization that we're seeing right now. So the AU Convention on cybersecurity and personal data protection, you're going to see adoption by it, by African countries, because that becomes like the gold standard because of the impact. A lot of personal data are going to be out there, and a lot of countries, we have to adopt that regulation. If pockets of industry and there do have data regulation, legislations or what have you, but you're going to have a more widespread adoption of that going forward. We should not also discount the effect of the Africa Free Trade Agreement as well. It creates a lot of opportunity. This will have been a good year for it, obviously, but the year has gone. You're going forward. You're looking at it that countries are going to look closely at how it impacts on them, on their attractiveness. Our country are going to look at, how to take the best benefit out of it. And for investors, it's a good opportunity to actually extend their geographical spread, within the continent.
Well, thank you very much, Samuel. And should anyone wish to speak to any of our lawyers at DLA Piper, we do have an exhibition space on the portal, so feel free to visit that and seek to talk to any of us. But we've unfortunately run out of time, and I'm conscious that the Africa Tech Summit team have a wonderful set of panels coming after us too. It's just for me to say thank you for the perspectives you've all shared, to give us a sense of the segments that are attracting interest, to see who's playing in the environment post-COVID in Africa. I think funding is obviously crucial to Africa's efforts to transform, and in this case, through technology. So may I just take this opportunity to say thank you to Andreata for joining us from Nairobi. Thank you to Ameya for joining us. I believe you're in London at the moment. And Gokul from Dubai, thank you very much. And Samuel, at late notice and given the challenges in Lagos, as a colleague of mine, I'll also bid you my thanks. Thank you very much. And to our audience, thank you for spending time with us. And I'll now hand over to Neander. Thank you.
Thank you.